All right, then let's discuss this further. Of course, make more sense of all of these issues. Yes, a lot of issues. And I have joining me live from our Abuja studio is a professor of finance and capital markets. He's also the president of the Association of Capital Market Academics of Nigeria, Professor Uche Uwaleke. Good afternoon, Professor Uwaleke. It's good to see you. Professor Uwaleke, good afternoon. Okay, I guess we're okay. Professor Uwaleke, can you hear me now?
Yes, I can hear you, Tori.
All right, I said good afternoon, and it's good to see you.
Yeah, good afternoon. It's my pleasure indeed.
All right, let me start with your expectations after all of the issues. Finally, all rates were left unchanged before we talk about the big elephant in the cupboard, which is the Forex issue. What were you expecting, considering the realities and all of the fundamentals on ground? Prof, can you hear me?
Yes, it's faint, but I think your question has to do with my expectations from the MPC meeting.
Yes, go ahead, yes.
Yes, I had expected a hold decision, which, of course, is what we saw. The central bank, as always, now talking about the Monetary Policy Committee of the central bank, given the fact that the economy is in a stagflation. Stagflation is the situation in which you have inflation rate as well as a stagnant growth rate posing some challenges. So in that kind of situation, the right decision would be to strike a balance. A balance that will not alter, significantly either the inflationary pressure or even the growth rate. So if you look at where inflation rate is today in Nigeria, 17.75%, which of course is way high, higher than the central bank's upper band of 9%. It would have been very difficult for the central bank to drop rates. Again, if you also check the exchange rate is quite high. So dropping the rates would mean injecting more liquidity in the system, and that liquidity could exacerbate the inflation rate and the exchange rate situation. Look at the capital importation report that you just read out. Capital importation fell in second quarter of 2021 by over 50%, compared to the previous quarter. Okay, so in situations where you have low capital importation, you wouldn't be reducing interest rates, because rising interest rates or high interest rates tend to attract foreign investments, particularly so that if you look at that report, foreign portfolio investments accounted for the bulk of it, followed by other investments, and then we had a tiny fraction coming from foreign direct investment. So reducing interest rates, benchmark rates, will not be in the interest of reining in inflation, checking naira depreciation, as well as attracting foreign investors. So if on the other hand you also consider increasing the rates, of course that was an option, because you notice in some other climes rates are being increased. Even in the US, as we speak, there is that consideration to resume interest rates and normalization. But in those climes or in those jurisdictions, interest rates are being increased, because inflation rate is quite low. So if you look at the rate of economic growth, real GDP growth that we've had in this country, especially since the country exited recession, has been quite weak. The latest we have is that of first quarter of 2021 at 0.51%. So economic growth is weak, and the central bank will want to support that. And that's why, in my view, the central bank wouldn't be increasing benchmark rates at this time, because doing so would again, of course, raise the cost of funds for most businesses. And at the end of the day, you end up rolling back the progress you've made, in support of economic growth. So reduce rates, very difficult because of inflation, exchange rate, and they need to attract capital. And increase rates, again, very difficult because of the low and the tepid economic growth, we have, and the need to support growth. So it's to strike a balance that the central MPC, thought it wise to hold the rates, not to change the monetary policy rate at 11.5%, not to change include the asymmetric corridor at +1 - 7, the liquidity ratio at 30%, and the cash reserve requirement at 27.5%. So the whole decision, in my view, was most appropriate, given the circumstance and given the economic, situation.
A very good way to start, Prof. Most appropriate way to go. Now, let's talk about the big one. MPC realizes abuses on regulations with regards to Forex, that's by BDC operators, and henceforth will discontinue supply of FX to the Bureau de change operators. Now, what do you make of this? Do you think the commercial banks can address these issues? PTAs, BTAs, we can go on and on.
Yes, my reaction is to say is a bold move on the part of the central bank, and in my view, is a welcome development. You've asked the question whether the banks, will be in a position to address the situation. But I think the banks, being fewer in number, will be better monitored by the central bank than the over 5,000 BDCs, that we'll have. So monitoring such disbursements, through the commercial banks would be a lot easier, for the central bank. Let's not forget that the BDCs, are actually meant to play a role in the Forex markets, and of course help to stabilize the exchange rates. That's my understanding of their primary mandate, to cater for the retail segment of the Forex market, such that when people need personal travel allowances, business travel allowances, they can approach the BDCs, usually for transactions that are not in excess of $5,000. So it's the retail segment. But over time, over the years, this role has not been effectively handled, at least from the perspective of the central bank. The central bank thinks that a lot of operators in that sector have involved themselves in some sharp practices. Many of them are alleged to be involved in round tripping. You get this Forex from the central bank, and instead of making them available to end users, taking the margin you are expected to take, you get them diverted to the black market. So many of them have been alleged to be involved in that, and there is also this allegation of becoming conduits for money laundering and illicit financial flows. And you also hear allegations that they've also made themselves avenues for bribery and corruption. People are settled because of the fact that Naira value is going down. You find people now settling bribes in dollars, and the BDCs are usually the places to go to obtain these funds. So these are allegations the central bank is having a cost, or is giving the central bank sleepless nights, as it were. So in order to check this, the central bank is now saying that is stopping this Forex allocations to them. So because they have not lived up to expectations, in the main, That is why this hammer is coming. And people have said, I've read it, people have said that that's not the way to go. Why don't you, single out those ones that are the corporates and punish them, and so you can allow the, the others to try to continue in their businesses. But I think that because of the sheer number of BDCs, a sector that just had a few of them, a few years ago, to over 5,000 now. Because of the sheer number, it's difficult for the central bank to really monitor these BDCs. They are expected to submit, periodic reports to the central bank, but we also hear that many of them have not been doing that. So I think what is been happening is to sanitize the system, to bring a lot of transparency into the Forex markets, and it has a lot of advantages. You can point to the fact that it's even one step in the direction of unification of exchange rates. Over time, you've heard of this clamor to unify exchange rates coming from, including international quarters. The IMF has been on it. Nigeria should liberalize its Forex market, unify exchange rates, get it more transparent. So this is one step in that direction. So if you take out that BDC rate, okay, you are marching towards unifying exchange rate. And what that will do is that it will improve confidence in the economy. It will also improve our standing before the international financial institutions, because that is very key. If your reputation in the international community isn't good in terms of reforms implementation, of course that also limits the kind of aids and grants and support, financial support you get anytime there is a crisis. Part of why we were able to get the $3.4 billion, the IMF facility we had, last year, was also because of the fact that the fund felt that the bank, that's talking about the central bank now, was committed to reforms in the Forex market, as it were. So this is one step in that direction. And another thing to mention here too is that if you noticed in the last 3 months or so, because I checked the movement in CBN external reserves. On the 16th of April 2021, the external reserves, the gross external reserves, stood at about $35.2 billion. And as we speak, it's just a little above $33 billion. So in a space of 3 months, the external reserves, have tanked by as much as by over $2 billion. And we can't continue like this. The central bank says on a weekly basis, it brings out $110 million, to the BDCs. But the fact remains that much of that money, finds its way in the black market, and that is also not serving any productive purpose, because speculative activity we know today takes place more in that kind of market where people demand dollars just to have as a store of value. People now demand dollars to for speculation and to have as a store of value. So when you demand dollars to hold because you think that the naira will further depreciate and you come and sell, that doesn't help the economy. So this measure, in my view, will take out some speculative elements in that market. It will also slow down the rate of attrition in external reserves. I think so, because right now the attention will now be to the commercial banks. Central bank will now be channeling such funds in a more transparent manner to the commercial banks. We just read this morning that the central bank has made available $200 million to the commercial banks. So it's now important for the central bank to ensure that the Forex is available, and when people go to the banks to get this Forex, that they get them. Tolu, I must mention too that this is not the first time this is happening. We saw this in January 2016. If you recall, in January 2016, again reserves had fallen, oil price had crashed, And the central bank had to take, again, this decision of banning sale of Forex to the BDCs. But of course, what happened, we saw the ripple effect, which is also likely to happen now, because even with this measure, there are flip sides. One of the flip sides is the fact that you have over 5,000 BDCs, and they employ a number of people, and of course, many of them will go down. Yes. And so, yes, you would say to that extent, unemployment rates will rise. And another flip side is the black market rates will shoot up. There's no doubt about that. We saw that in 2016. Black market rates went up when the central bank did that, such that by December of that year, the rate had dropped by as much as from 248 naira to the dollar, to about 495, and by January 520, naira to the dollar. But we also saw that in December 2017, when the central bank introduced the I&E window in about April, by June, that rate had crashed to about 390 naira to the dollar. So it's not the first time. In 2020, it also happened. Central bank also stopped the sale of Forex to BDCs in March. That was on the back of the COVID-19 pandemic. Air and land borders had been shut, no travel restrictions, and the central bank felt there was no need also releasing money to BDCs, and it stopped the sale of Forex to them, and then later it was resumed. So I think this time around, the central bank should sustain it and ensure that it puts a stop to this allocation, because we hear Nigeria is the only country, I've read about it, even though I have not confirmed. Nigeria is the only country where the central bank gives money to BDCs. So we can't continue to encourage this rent-seeking behavior on the part of economic players.
All right, Prof, let's wrap up as a follow-up, because I was about to come in talking about how the banks can meet up with this. Yes, I'm aware $200 million already released to the banks, and they have also been instructed to create a teller desk to be able to go about this. But the issue of rent-seeking, round-tripping, and all of this, I'm thinking of how it should also be checked in the banks, because they also have customers and friends. So how do you see the issue of interest here? Though the CBN has said, yes, anyone caught, they will come down hard on them. What more checks do you think can help perfect this? We already know manufacturers are having problems in getting funds. That's on the larger side. But all the same, even small business owners still have issues with this. So what do you really think can be done so that what is on ground will get to those that are worthy or that have the requirements, meet requirements? They should be able to get Forex as at when due.
Yeah, thank you very much. As I mentioned earlier, this is not the first time it's happening. We've had the experience in 2016. We've also had experience in 2020. And, well, interestingly, it's the same central bank governor that has been there. So I want to believe that if you like, the learning curve, the experience curve, is on the is in favor of the CBN governor. The central bank must have learned some experiences from the how it handled the 2016 issue, as well as that of 2020. So some lessons must have been learned, and I want to believe that even this measure must have been thought through. The central bank, I want to believe, must have anticipated the near and medium-term impact of this kind of measure. As I said earlier on again, I think the monitoring will be better done, through the commercial banks. The central bank has said that the commercial banks must open teller points, dedicated for Forex sales. So it now behoves the central bank, to ensure that this happens, to monitor the implementation of this, very closely. The central bank has also said whoever goes to the bank to obtain Forex and having met all the conditions and is denied should report. Again, the central bank should be very clear about the reporting procedure. Okay, how should people who experience challenges getting Forex, how should they report this matter to the central bank. In the under the normal reporting mechanism that is handled by the Consumer Protection Department, if you have any issue with your bank, the first thing the procedure says is that you first complain to the bank that if within some days you don't get satisfactory response from the bank, you can now escalate it to the central bank. So, but this is a different ball game. You are in the bank and you can't get Forex. You have met the necessary conditions. There has to be a prompt response to to such complaints, which is why the central bank should again come out again and let the public know how these complaints should be escalated in the central bank. So monitoring is very key in this aspect, and it would appear that the banks are winners in this whole exercise. I also want to believe that end users too are part of the winners, but it's also important to ensure that the same thing that the BDCs are being accused of, the banks don't get involved in them. The banks don't get the temptation of also diverting these funds to the black market. So the central bank should have a way of checking this, and more importantly, come down very hard on banks that are found to be guilty. Such penalties must be stiff to serve as a disincentive, because if a bank, if you're asking a bank to pay, for example, 50 million naira on an infraction related to Forex, and the bank thinks that by such sharp practices it could get 100 million naira, of course the bank would do that and easily pay, settle the fine.
All right, Prof.
So to say. So the penalty has to be stiff, and possibly the central bank, I'm sure, should explore options of even excluding such banks, from getting assessing its Forex, wherever that is established. So it's important that the central bank should up its ante in terms of monitoring, strengthen, very, very importantly, strengthen the Consumer Protection Department of the central bank, and also let the public know, sensitize the public as to how to go about lodging complaints when they can't get Forex.
All right, Professor Uche Uwaleke, that's much time can take. I must button now. Thank you very much, Professor of Finance and Capital Markets, as well as President, Association of Capital Markets Academics of Nigeria, Professor Uwaleke, joined us live from our Abuja studio. Thank you very much for bearing your minds on this very important topic of discourse.